Hi traders, welcome to this live currency strength indicator table video with me, John, on this Friday the 17th of November. Hopefully you've had a good trading week so far, or well, a good trading week. Hopefully we can continue the success that we've had recently, and yeah, let's hopefully that we can continue that into next week. We are in one open position at the moment, so we will go take a look at that market and just have a little review, see if it's still worth us being in that position. That is a Kiwi CAD position. We can see CAD is on the tables here right now, so still happy to potentially hold that. Kiwi CAD has come on the same side of the day traders table as a weak currency, but I'm more looking at this kind of CAD situation here as something to try and take advantage of. Aussie US dollar and Aussie CAD have been on our radar recently, so we'll go and have a little look at those markets going into today. The yen appearing on the day traders as a strong currency, so I put in the Discord channel last night that there's a potential to see a little bit of overextension from these yen pairs now, so I've cancelled all ideas regarding the yen, waiting to see if we do get that bigger retracement now. So that's kind of playing out there at this current moment in time. Have a little look at the slate today. We've had most of the data drops already. We had some CPI out of Europe, and we've also had some retail sales data out of the UK. Building permits up for the US at 1:30 p.m. So let's go ahead straight into those charts then. Let's go start on the chart that the currency pair that we've got open at the moment, and it's Kiwi CAD. So we got in basically because of the situation here where we were above that daily zone of support. Price was pulling back, and we were basically watching to see this, if the price could trade back above this 50 MA. And it did come at a little bit of a cost because, you know, I don't really like getting long at previous highs. I prefer to try and get long down at these swing lows, but our alert did go off here at 0 spot 8200, and price did rally to the upside. So I thought that maybe the momentum would just push price to the upside at that point. So yeah, not the best entry, to be honest. I think if we probably were looking at it for a better entry, I would have been liking to sort of get in around these swing lows here. We could have had a tighter stop loss below the 200 moving average, and we would have been in a better position in terms of risk to reward here. But we're potentially closing back above the hourly 50 MA again here. We're just gonna have to wait to see what price came in. We had a sensible stop loss. We put the stop loss below the 200 moving average, below these swing lows, and the reason we do this is because of events like these here where we've got those kind of two breaks below the low. So that was a good idea to put the stop loss at the 200 moving average rather than that swing low, because what the market tends to do after it pushes up from an area, it likes to come and revisit that area to potentially either continue with the sort of bullish move momentum or breach it and head towards the next level of support. So yeah, it would have been probably better to try and get in around these lows instead. I did try and take the momentum move instead, trying to watch that break above the 50 at the time as well. You can see that the average was kind of pointing up here, so I did think that the momentum was behind this market. Like I said, don't particularly like to get in at previous highs, so we just have to wait this one out now, give a little bit of patience to it, see if it can breach these highs, see if it can continue to push to the upside there in line with that weakness that we're seeing from the Canadian dollar at the moment. If I just go up to a daily time frame, this is what it's looking from a daily time frame point of view so far. Like I said, if we can get maybe a close like this today or a bullish close, it could lead into a bullish continuation going into next week, and what we're basically looking to target is this 0 spot 84 swing high. I've put my target in just shy of that, around about the 83.90 level, because I like to be the first person out of the move. That's just shy of a 2-to-1. If you did want to stretch it up to the swing high here at 84.20, that's something that you can do, or stretch it to the 2-to-1, which is around about that 0 spot 84.05. I just know that that psychological number could be a bit of a sticking point, so I'm going to put my targets within that range. But let's see what happens here. At the moment, things are starting to turn back in our favour, so we'll see if that can continue, and if it does, then, you know, hopefully we can see another good potential trading outcome out of this market. Let's go on to those charts of interest then, so Aussie CAD being one of those. Now obviously this is a little bit different to Kiwi CAD. We did get the close above the 50 moving average yesterday. I was kind of watching this area down through here as well. What I expected at the time was a lower high to form, a pullback into this area, and then we were going to look to get long at this point with the potential to go long in here. That didn't quite happen in the end, and the only difference I had with this market than Kiwi CAD was the fact that if I looked at the sort of gap between the entry point, which would have been around about here, and the stop loss, it was quite a large sort of area to kind of cover. So if I was just to grab my entry criteria tool, the one thing I would have looked for was a stop loss below the 200 moving average and an entry above this high. Obviously it wouldn't have been triggered and we could have maybe looked at something a little bit different, but this is the way I would have looked at this position in here. I would have put my stop loss below the 200. It would have been an 80 pip stop loss, which isn't sort of the worst stop loss in the world, but you can see that the ATR is around about 50 pips. So if I could have maybe gotten an entry around about here instead, that would have obviously been, in hindsight looking back, would have been a very good entry, especially because we came back into these swing lows down through there and rejected, and price is now moving higher. So we're just going to have to live with that one for now. What I would like to see is price obviously breach this daily resistance zone as well at the 0 spot 8900. Now that we're getting that, this could open the door up to a move to the next level of resistance, which are these highs back on the 14th of July 2023. That 0 spot 9050 level that we pointed out could be some good targets to look for. So what we could look for instead is watch how these daily closes finish. We could go to the 30-minute time frame, and when we're in that sort of trending environment, we could look to be a buyer above those averages again. You can see here when price breaches above the average, we can get an extension. It's a little bit smoother on the hourly time frame, like I said in a previous video, but what we can look for now, because we're getting that sort of daily close, we can start looking for those areas. Now this 0 spot 8900 is looking pretty good at the moment because that's where that 50 MA is. So let's say we get a nice strong bullish close today. I think going into next week we can look for the pullback, see where that 50 moving average ends up, and then look for a potential long around that area. It's unfortunate because we were looking to see if price would come back down into these swing lows for a long. It just didn't do it. We didn't get it in the end. Price formed a low a little bit higher up, almost like a inverse head and shoulders pattern form there, and then price started to push back to the upside, which is some kind of patterns that you always see when you're looking for those reversal situations. So unfortunately for us, we didn't manage to jump on the back of this one. Obviously we have Kiwi CAD, so hopefully Kiwi CAD can follow in the same sort of footsteps as Aussie CAD, if it does obviously continue to push to the upside there. The other market of interest is Aussie US dollar. I'm not really interested in this market. The only reason why I'm not interested is because of where price is on the daily chart. The difference between Aussie CAD and Kiwi CAD is we've already breached the swing highs, whereas Aussie US dollar hasn't quite done that yet. I need Aussie US dollar to breach through this high here, maybe give me a good couple of closes. Reason why is because then I'd expect price to try and head to the next level of resistance, which is up towards the 0 spot 68.75. We can then wait for a couple of days pullback and then try and get into something there. I think at the moment trying to get in here when we're at an area where sellers have been active quite a lot in the past is a bit more of a riskier move than trying to be long down towards these lows here. So I'm going to leave Aussie US dollar alone. I'm going to focus on sort of Aussie CAD. Focus obviously can remain on Kiwi CAD because we're already in that position. So we need to just keep an eye on this one, see how this one performs, you know, and see if it can obviously continue to push higher as we hope it will. So just to kind of recap on some of the markets then as well, we were watching the likes of Euro Yen. It's a good job we did get out of Euro Yen at that target zone in there because we did see a double top. You can see how prices started to turn around on these yen pairs now. It needs a pullback, okay? This market does need a pullback. So, you know, look at Kiwi Yen as well. We'll be looking for potential entries. If price hit our sort of entry criteria around, I think the alert was 90.20, entry 90.30. that hasn't even happened, and that's another reason why we wanted to cancel all these positions, because we're just kind of struggling at this point. Aussie yen's a really good example of this. I was looking to potentially put a buy stop order in after price came into this swing low, and it just completely melted away, consolidated overnight, melted away again. So, you know, looking at this market now, if we look at it from a weekly perspective, we're closing potentially below the previous week's low. Sorry, not previous weeks, this weekly high that formed back in June of 2023. So yen's starting to show signs of some strength coming back in at the moment. If I actually just bring in the Discord channel over here, I can just show you and highlight to you the live momentum dashboard. Look at that yen complex down here. Okay, look at all the red. That's obviously not what you want to see if you want to be long in a particular market. So yeah, not really what I'm looking for right now. Aussie yen, or the yen in particular, is getting stronger. Pound yen absolutely nosediving, 164 pips to the downside on pound yen. Let's actually just go have a little quick look at that market, because I haven't actually taken a look at that today. Wow, okay, yeah, so look at that big move that's come from that. That must have been driven by that data that we've seen as well. But we are approaching these sort of, you know, daily levels of support. Maybe price is going to come and retest them, or maybe it's going to come and retest this 183.70. But the important thing is, I think we just wait for this yen move, whatever happens here, to potentially play out. Now we've had some really good success with it, you know, so, you know, it's no harm really waiting to see how price does play out here. So we'll see how it reacts at that 86.50 level. So yeah, that's what I got for you today. Obviously AUDCAD will probably be our primary focus pair, probably looking at maybe an alert at 8900, maybe an entry at 89.10. Stop losses 45 pips. That's what I'll probably go for today's primary focus pair. Thanks for watching the content this week. I hope it was very helpful. Hope you managed to catch some of the moves, and I'll catch you next week.